the market goes up, you go up. When the market goes down, you don't go down. Save Money Radio, your money safe and sound.
Welcome to Safe Money Radio with your host, Brad Pistole. Brad is a retirement and income specialist, primarily serving Springfield, but he's sought after nationally for his expertise in helping people secure their retirements. Mr. Pistole is a licensed life insurance professional in the states of Missouri, Arkansas, and Kansas, and he specializes in working with people who are near retirement and those who have already retired with wealth management, income planning, and asset protection strategies.
Save Money Radio, your money safe and sound.
And now, here to talk with you about securing your retirement, your host, Brad Pistole.
Well, hello everyone. If this is your first time joining us for Safe Money Radio, we're so grateful that you're joining us today. Now, you might be listening on the radio, but if you are, just know that we also have a podcast, the Safe Money Radio podcast with Brad Pistole. So you might be listening right now on the radio, but you might be listening to the podcast, and I want to say this. I've been hosting Safe Money Radio for almost 16 years now. It's the longest running financial planning show in the Ozarks, and this might be the most important show that I've ever written. You see, friends, I've written hundreds and hundreds of shows over the years, and a lot of my friends who are on radio have a national scriptwriter that writes their material for them. I don't do this. I write every single word of every single show myself, and that's why they call me the unicorn. It takes a lot of time and a lot of dedication, and as a matter of fact, I'm recording this show at 11 p.m. at night after the end of a very long day on a Thursday night when it's been a really long week. But there's a reason why I do this. This is what helps me resonate with my clients, people who listen all over the country. This is why I'm licensed in more than 15 states. And I want to say this. This is why I say today might be the most important show I've ever written. Over all the years, all those behind radio always say this. Make sure you don't ever talk about anything political on your show. Just stay away from it. It's going to be better off in the long run. And for the most part, I've tried to always pay attention to that. But this last week, before I started writing this show, there was an attempted assassination on President Donald Trump. Now, friends, we're living in a time that's unlike any other time in our nation's history. And if you think for 1 second that everything isn't at least a little bit political, then you're being fooled. Because I will tell you, almost every single thing in this life in today's world is. Just pay attention to what's going on everywhere you go. And if you don't believe me, just stay tuned for today's show because I'm going to prove it. It'll be unlike anything I've ever written or recorded before. I want to tell you this. My good friend, America's IRA expert Ed Slott says this. The number one thing that will separate you from the retirement of your dreams is taxes. Do you think taxes are political? I want you to think about that for a minute. Do you think the president and the occupants of the White House have anything to do with your taxes? You better believe it does. So when it comes to you being able to live the retirement that you plan to live, you better believe that politics come into play. And if you don't believe me, just wait till the Trump tax cuts end in 2025. There has never been a time like right now. And this is a fact. The Trump tax cuts are set to expire at the end of 2025, and your taxes are going to go up if something doesn't change this. So you need to pay attention to what's going on in the world around you. And if you don't believe me, just listen to this. I recently heard this. It got my attention, and I thought I definitely want to share that on the show with everyone because the title of today's show is The Tax Man is Coming for You. How did we go from fighting a revolution over a 2% tax on a breakfast beverage to what we pay today? We're taxed on money when we receive it. We're taxed on money when we spend it. We're taxed on money when we keep it, when we invest it, and even when we die with it. And it gets worse. We commute to work to make money in a car that is taxed, to register it on roads that were already taxed to build. This car is fueled by gas that is taxed even further, and many times it goes through tolls that tax you again. Now that's to maintain bridges and highways and tunnels that have already had billions of taxpayer dollars allocated to them, and yet they're still falling apart. Then when you get to your office that is taxed to exist, and a corporation that is also taxed to do business, that almost certainly requires permits and other things that are taxed, it doesn't end here. You are paid a paycheck that will be taxed, and the corporation must match another payroll tax on top of what they have to pay you. Then you go home to a home that you are taxed to live in. Every single year that you purchase with money that the government already taxed you on. And when you pay off that house, you think you own it? Well, guess what? You still pay taxes on the house that you think you own. And if you don't realize that you don't really own it, try not paying the real estate and property taxes on it after you've paid it off. Just wait and see what happens. They will come take your house away from you. And oh, by the way, the more money you make, the more you will pay in taxes. Friends, if you're angry right now, just hold that thought. Our federal tax code is 2,600 pages, 400 pages longer than the unabridged version of Webster's dictionary. If you read that tax law cover to cover and you did your taxes solely based on what you just read, you would probably go to jail. Want to know why? Because that does not include the over 9,000 pages of additional IRS regulations that were never passed into law, but were written by some bureaucrat who's sitting in his office that we provide the tax dollars to pay for. Friends, if that doesn't make you shake to your core, then you're listening to the wrong radio program. You're listening to the wrong podcast. If it doesn't get your attention, I'm going to be real honest, I probably can't help you. You've got to understand something right now and realize this very simple truth. The tax man is coming for you. He and his 87,000 new friends that he just recruited to watch every single move you make. He is coming after your tax-deferred retirement accounts. He's coming after everything you think belongs to you and your family. Remember the day you retire and you turn on income from your 401k, your IRA, your TSP, your 403b, or any other type of tax-deferred savings account? He's watching every single penny that you have coming in from every single source. He's watching your Social Security. He's watching your pensions. He's watching your IRAs and your 401ks. He's watching your dividends. He's watching the interest you earn on your CDs. He's watching the money that's coming out of your annuities. He's even watching your life insurance that you thought was going to be totally and completely tax-free. And it is in many ways, but in other ways, it's not. If you don't believe me, talk to a retirement income certified professional who understands taxes. You see, there can be significant taxes on the tax-free death benefit associated with life insurance when it comes to your estate. If you don't own it the right way, it will be included in the total value of your estate, which could cause your heirs to pay estate taxes because of that tax-free life insurance. Friends, there's never been a more important time than right now to make sure that you're working with a retirement income certified professional who understands all aspects of retirement income planning. Many advisors just hang their hat on the rate of return that they can get you, and they don't want to talk to you about taxes. They don't want to talk to you about Medicare. They don't want to talk to you about Social Security planning. They're not going to talk to you about IRMA, income-related monthly adjustment amount surcharges. They just want to talk to you about the rate of return that they can get you, or in other words, how much money they made you. But when the opposite happens and the market takes a 20% crash, they will tell you you didn't lose anything. Friends, it's just a paper loss. You see, it can't be both ways. If your accounts are up because the market is having a great year and they're telling you that you're making all this money, then it's only a paper gain. It can't be a realized return if you make money, but only a paper loss when you lose money. If you've listened to this show for very long, you know that America's IRA expert and CPA from New York, Ed Slott, says this: it's not what you make, it's what you keep after taxes that counts. So stay with us today. We're going to be talking about these critically important concepts regarding your retirement. If you want the retirement of your dreams, just call us at 866-780-SAFE. That's 866-780-7233. Call and ask for our free information and ask for a free financial consultation so that you can sit down with retirement income planning experts who understand all aspects of retirement planning. Our number again is 866-780-7233, and there's always someone standing by to take your call. Friends, on today's show, we're talking about what a crucial time it is in our world. You see, there's an election that's coming up in November of 2024, and you better believe it's an important one. The future of this country, the future of our republic, the future of taxes, and the future of all kinds of things retirement income related is on the ballot. All these things are going to be affected by who's in office. You better believe that it's more important than at any other time in our history, and it's time for you to get involved. It's an important time to understand your own retirement income plan. It's important to understand what kind of impact it has on your future retirement when your country is $35 trillion in debt. And it's important to understand that this number is increasing by $1 trillion every 100 days. It's important to understand things like the taxation of your income, your Social Security, and your Medicare premiums. You see, there's something called IRMA, which stands for Income-Related Monthly Adjustment Amount Surcharges, which is based on your total adjusted gross income every single year of your life after you turn age 63. You see, after you turn age 63, your total adjusted gross income will affect your Medicare premium starting at age 65 and every year of your life thereafter. Now, let me show you how this works. At age 64, it's going to affect your premiums at age 66. At age 65, it's going to affect your Medicare premiums at age 67. And this will continue for the rest of your life. So once you turn 63, this is never going to stop. Every single year after age 63, your modified adjusted gross income is going to affect your Medicare premiums 2 years down the road. It's also going to affect all other kinds of things like your Social Security taxes, your federal and state taxes, and many other things. So if you've been fooled into thinking it's just how much money you make in your stocks, bonds, and mutual funds, then friends, you drank the wrong Kool-Aid. If you think that that's all that's involved, then you have your head in the sand and you've been fooled by someone who's telling you that all that matters is your rate of return in your accounts. Your rate of return has very little to do with the success of your retirement plan. If your assets aren't protected from losses and fees, once you start distributions and go through a downward market, your head is going to spin. Once you start taking distributions from a tax-deferred account and you go through your first tax return and find out how much the distributions from your 401k or IRA affected your Medicare premiums, your Social Security taxation, IRMA, federal, state, and all other kinds of taxes, you're very quickly going to understand that your rate of return is nowhere near the most important part of your plan. Has your current advisor ever talked to you about decumulation? How to get the money back out of the accounts that you've been working so hard to build up during all of your accumulation years? Because friends, the experts all agree. The most important part of retirement planning is the second half of the game, what Ed Slott calls the back nine. You see, it doesn't matter who has the lead after 9 holes. You could have millions of dollars in your accounts by the time you retire. And if you don't understand the impact of taxes and the impact of market volatility on those accounts, once you start taking the distributions, you can watch your money evaporate literally overnight. How many people do you know that have gone back to work after being retired for less than 10 years? Do you want to know why this happens? It happens because they did not have a plan for the second half of the game. They didn't have a plan for decumulation. Friends, taxes matter. Safety matters. Understanding the impact of the sequence of returns risk matters. It's what I call the quadruple whammy. It really, really matters. What is the quadruple whammy? Well, see, that's what happens when you combine the distributions from your retirement accounts while experiencing losses due to market corrections, while paying a fee to the advisor who lost your money during that downturn, while paying taxes on the distributions that you took out. That's why I wrote an entire best-selling book about this. The book is called Bulletproof: The Safe and Secure Retirement Income Plan. And that's why a certified financial planner named Robert Powell, who works with USA Today, Market Watch, and Retirement Daily, recently asked me to write an article about the quadruple whammy and why it's so important to have safety as an element in your retirement income plan once you retire. Now, you can read this article by simply going to guaranteedsafemoney.com. It's listed on my website. You can also just Google search it. Robert Powell writes for TheStreet.com Retirement Daily, and you can find the article there. It was published on July the 12th, 2024. We talk about why it's so important to protect yourself from losses, fees, and taxes once you start taking distributions. Now, friends, if you missed the first segment of this show, I'm going to repeat something in our last segment that talks about the history of taxation in this country. Now, I want you to listen closely. If you didn't know it, the federal income tax started in 1913, and people who know the history of this country say there is no legal written mandate stating that we should have to pay an income tax in this country. If you don't believe me, just go look it up. Yet guess what? We are inundated with taxes on top of taxes on top of taxes everywhere we turn, and we just keep paying them. What has happened to the overall tax plan in this country is unbelievable. Now, if you're listening on the radio right now and you missed the first part of the show, you'll be able to go to a podcast. Just go to YouTube, and that way you can listen to all of it. You can stop, you can pause, you can rewind and play it again. But I'm going to be playing it again here in just a few minutes. So I want you to listen to the impact of taxes in this country. And don't ever forget, taxes never end. Make sure that you're preparing right now for the most important part of your retirement, taxes. If you don't believe me that the taxes that will be due on the distributions that you'll be taking from your tax-deferred accounts will be the most important part of your retirement income plan, just wait till you start taking those distributions. Just wait till you find out how much they affect your Medicare and your Social Security taxation. Now, if you're someone who's been blessed to have worked with an educated retirement income expert, and you've converted everything to Roth IRAs, or maybe you have overfunded life insurance policies and tax-free accounts like Roth 401ks, you're not going to be as impacted during your retirement years. However, I know this fact. The majority of people listening right now, more than 90%, have their money saved in tax-deferred accounts. So when you take the money back out, it's going to be 100% taxable, federal and state, and it's going to affect all other aspects of your retirement income planning. That includes your Social Security taxation, your IRMA surcharges, your dividend income, interest earned from CDs, and many other things. It's all going to be impacted. Friends, we are retirement income certified professionals through the American College, and we have come up with a complete overall financial plan that will show you how to beat the tax man. If your current advisor has never talked to you about tax planning, they've never talked to you about what's going to happen once you retire and start taking the money back out, then you need to be talking to a decumulation expert. Call us anytime at 866-780-SAFE. That's 866-780-7233. And just ask for a free financial consultation. We will give you the information that's changed the lives of people all across the country. Our number is 866-780-7233, and there's always someone standing by to take your call. Since I have to take a break, now would be a great time to call me for a complimentary copy of my best-selling book, Bulletproof: The Safe and Secure Retirement Income Plan. And I'll also give you a copy of my Safe Money Kit. My number is 866-780-SAFE. That's 866-780-7233. Isn't it time to stop exposing your retirement to market risk? You're listening to Safe Money Radio with Brad Pistole.
Did you know that your Social Security could be much higher depending on what option you choose for claiming your benefit? Social Security income is not as simple as some think. When should you take it? Should you only take your spouse's benefit while you continue to work? Deciding how to receive your Social Security benefit can make your head spin. Don't decide about your retirement without the facts. Call us now and ask for your complimentary Social Security guide at 866-780-SAFE. That's 866-780-7233. You're listening to Safe Money Radio with your host, Brad Pistole.
Welcome back to Safe Money Radio. I'm Brad Pistole, a certified financial fiduciary and a safe money retirement specialist. Now, friends, on the show today, we've been talking about the impact of taxes when you retire. If you think tax planning is not an important part of your planning, someone's been lying to you, or you have your head in the sand. Listen, I want you to hear this again. This was from the very first part of the show today, but you need to realize just how much taxes affect your life. So listen to this. How did we go from fighting a revolution over a 2% tax on a breakfast beverage to what we pay today? We're taxed on money when we receive it, when we spend it, when we keep it, when we invest it, and even when we die with it. And it gets worse. We commute to work to make that money in a car that is taxed again to register on roads that were already taxed to build, fueled by gas that is taxed even further, and many times we go through tolls that tax you again. And what are the tolls for? To maintain the bridges and the highways and the tunnels that have already had billions of taxpayer dollars allocated to them, and guess what? They're still falling apart. Then when you get to your office that is taxed to exist in a corporation that is also taxed to do business, that almost certainly requires permits and other things that involve taxes, you are paid a paycheck that the corporation must match another payroll tax on top of what they have to pay you. Then you go home to a home that is taxed to own every single year that you bought with money that the government has already taxed you on. And once it's paid off, you keep paying taxes on what you think belongs to you. And if you don't believe me, try not paying the property taxes on that home once it's paid off and you own it. They'll come take it away from you. Oh, by the way, the more money you make, the more you're going to pay in taxes because it warrants the government taking even more of a higher percentage of your money. And if you're angry right now, I just want you to hold that thought. Our federal tax code is 2,600 pages, 400 pages longer than the unabridged version of the Webster's Dictionary. But if you read that tax law and then you go file your taxes based solely on that, you'll probably go to jail. You want to know why? Because that doesn't include over 9,000 pages of additional IRS regulations that were never passed into law, but rather were written by some bureaucrat who's sitting in his office that we provide the tax dollars to pay for. Friends, if this doesn't tick you off, I don't know what will. Just think about how much of your life is spent working just to pay the tax bill that's due on all of your income. It's often said you spend the first half of your week just working to pay the taxes on what you're going to earn. What you just listened to was specifically focused on your retirement planning. It's just about what happens every single day in your life. It happens to you, your spouse, your children, your grandchildren, your coworkers, your church members. We are absolutely fleeced by the tax man every single day in this country. And if you think it doesn't matter who's in office, or who your congressmen or your senators or presidents and vice presidents are, then you've been fooled. It matters, and we need someone in office who cares about the everyday people in this world, who fight for every single dollar just to make ends meet. Friends, there's never been a more important time than right now to get involved in your own financial plan. You need to know what's at stake. You need to know all the taxes that you will face in the future. You need to know what Congress is setting in place so that the tax man can come take more of your money away from you. And it doesn't stop when you die. That's why the phrase rolling over in your grave exists. You see, when you die and you find out just how much of what you thought was your money ends up in the hands of the tax man, you will roll over in your grave. That's when Uncle Sam gets the most from your retirement dollars. And it's because you don't know what you don't know. And if your advisor doesn't know what they don't know, or worse yet, simply doesn't tell you what's going to happen to your tax-deferred accounts when you die, that's when Uncle Sam will smile all the way to the bank. That's when he will come in and take additional distributions from your 401ks and your IRAs because you didn't know the laws that he has in place regarding how things pass on once you die and leave them to an heir, especially if it's a non-spouse beneficiary like your children and grandchildren. Here's the thing, friends. You need to know what happened with the Secure Act. You need to know what happened with Secure Act 2.0. And if you don't, you need to be working with a retirement income certified professional who's highly trained to keep up with all of these laws so that you keep more of your own money in your pocket. And when you die, you keep all of your hard-earned money passing on to your spouse and your children and your grandchildren, not the unintended beneficiary named Uncle Sam. And I can tell you this, as an Ed Slott Master Lead IRA advisor who's been trained regarding these tax laws for more than 15 years now, the majority of people do not have a plan in place to deal with this, and not having a plan is planning to fail. You know the saying, not having a plan is planning to fail. Friends, our number is 866-780-SAFE. That's 866-780-7233, and we are retirement income certified professionals. Call us today, book a free financial consultation, and when we get together, I will give you a free copy of my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. Our number again is 866-780-7233. This is Brad Pistole, your host of Safe Money Radio. I'll be right back after this informative message.
Business owners, some of you have worked 20 and even 30 years to build your business. You're ready to sell this asset and go into retirement. You don't want to risk or lose any of your hard-earned money. Property owners, have you just sold your property and need to turn that money into lifetime income? How about 401k participants? Have you recently changed jobs or reached age 59 and a half and have a retirement account that you don't want to expose to market loss? If you have money you're counting on for retirement, we can ensure that you sleep at night with our income and wealth preservation planning. Don't gamble your life's work away if you are nearing or in retirement. Take some chips off the table and do something to take the stress out of retirement. Call 866-780-SAFE. That's 866-780-7233. Now back to more Safe Money Radio with your host, Brad Pistole.
Welcome back. I'm Brad Pistole, your host of Safe Money Radio. I am a capital preservation and strategic income planning specialist working with clients right here in Springfield and Ozark, Missouri. Well, hello, friends. Thank you so much for joining us on Safe Money Radio. This is the second part to a show that I call The Tax Man is Coming to Get You. So if you didn't hear the first part of today's show, you can, of course, always go to YouTube and just watch the podcast, and you'll be able to listen to all of this together as one show. In the first part of the show, we were talking about the importance of decumulation and protecting you from things like what I call the quadruple whammy. What is the quadruple whammy? Well, it's when you take distributions from a retirement account while the market is going backwards and you experience losses on those accounts, while paying a fee to the advisor who helped you lose your money on those accounts, while paying taxes on those distributions because the money came out of a tax-deferred account. And so we're talking about how so much of the time people focus on the first half of the game, or what we would call the front nine. They forget to focus on the back nine, the second half of the game. And here's the thing. Yes, you may work for 30 to 35 years during your accumulation phase of life, but you're going to retire and then be retired for 30 to 35 years during the second half of the game. And that's what we call the preservation and decumulation phase of retirement planning. And so many advisors just don't focus on the second half of the game. They're all about the gains that you make. They're all about the accumulation phase. And there just isn't any conversations about tax planning, about Social Security, about IRMA, which is income related monthly adjustment amounts, just all these different things that are going to come into play in the second half of the game. So here's what I want to do on this second half of the show. To help emphasize just how much the tax man is going to come after you, I'm going to have two special guests. Ed Slott, who's America's IRA expert and a CPA from New York, and I'm going to have Heather Schreiber, who is the nation's leading Social Security expert. She is also a fellow retirement income certified professional, and she's been very highly trained in 18 different core subject areas regarding retirement income planning. So sit back, enjoy yourself. Today we're going to be focusing on the tax man is coming after you when you retire. He's going to be watching every single thing you do, every single move you make, every single distribution you take. So let's start in this first segment with something that my good friend and CPA Ed Slott says regarding the tax man coming after you.
There was a time when a tax law was enacted. It was a big deal, and everything became effective on the date of the president's signature, on the date of enactment. Now we have not only tax laws coming at us every couple of months, it seems like, but like you take Secure 2.0. I always have to laugh at the name of the act. Yeah. As I always tell you, whenever Congress and I've learned this over 40 years of studying tax law, whenever Congress names a tax law, you can almost always bet that whatever they name it, it will do exactly the opposite. Right. How about that Deficit Reduction Act? How's that working out? When I saw Secure and then Secure 2.0, I said to myself, hold on to your wallets. And sure enough, and it was so complicated, and they just throw these things together. Secure 2.0 was signed into law on December last year, December 29th. 2022, effective 2 days later. How's anybody going to know? So, of course, as you heard on the program yesterday, there were a lot of details that were ambiguous. Some things were even wrong. For example, when they ran home for vacation, or as soon as they did the law, they inadvertently cut out the ability to do catch-up contributions. They deleted it from the code, trying to put something else in there and say, oh, bye, got to go, Christmas, Yeah. And now IRS has to deal with it. So that was protected. But effectively, under Secure 2.0, you weren't even allowed those age 50 or over, and that's a big deal, put more money in, but that was fixed. But there's a lot of other things that are not fixed. And what we do in Ed Slott's Elite IRA Advisor Group, which Brad's been a member of over 15 years, something like that, they take the tax training. Now, I just want to be clear. I say this on every program. What we do as an educational company, a tax plan, we teach tax planning, and I think that's the critical part of a retirement account. It's what you keep after taxes. You can't spend what goes to Uncle Sam. And if all you're doing is building and building and building, all you're doing in the end is building a savings account for Uncle Sam. And as you know, he's not even your real uncle. So there's no obligation there. So what we did, and Brad started with this group when he realized, the only way to protect my clients so they can keep their money, yes, I can help them invest and protect it. But what about protecting it from taxes? And that's what you've been doing for your clients. So people say, well, you have this group, Ed Slott's Elite IRA Advisor Group. What do you teach them about investments? No, I don't do anything with investments. Our team doesn't. We do it on what I think pays off even more than investments, good tax planning.
That's right. It's about, so many people are focused on how to get the money into the account and what it's invested in, but it's about how to get the money back out of the account. Keep as much of it as you can in your own pocket, and pass on as much as you can to your real family members, not Uncle Sam, who's not a family member, who may inherit 50%. So if you're listening right now, you may be one of the people that's, I have callers all the time that say, Brad, I've been listening to you for 13, 14 years because we've been on 15 years now. And they will say sometimes, why are you always talking about Ed Slott? You talk about him all the time. Well, you're learning right now. How quickly he knows the answers to all these things that I can't possibly know all those answers to.
This is a specialized area. The definition of an expert?
What's that?
Somebody who knows more and more about less and less until he knows everything about nothing. That's me.
That's good. That's good. Well, if you want to talk to one of those experts and find out what you need to be doing for your retirement accounts, we have the sources right here. So call us, 866-780-SAFE. 866-780-7233. If you want a copy of my book, Bulletproof, The Safe and Secure Retirement Income Plan that Ed wrote the foreword to, just call us. We'll give you a copy absolutely free. If you want a copy of Ed's book, we will give you a copy absolutely free. So just call us at 866-780-7233. This is Brad Pistole, your host of Safe Money Radio. I'll be right back after this informative message.
Have you recently changed jobs and now you have a 401k or another retirement account you don't want to expose to the risk of market loss? You've worked too hard to leave your retirement to chance. Since you'll probably start another retirement account at your new job, why not ensure your old account provides you principal protection, the opportunity to participate in the market with locked-in accumulation, and a guaranteed lifetime income? We can help you roll over the retirement account from your previous employer and identify products that provide the potential of index-linked credited interest while limiting market risk. Did you know that if you're age 59 and a half, you may be able to use money out of your employer's plan even if you're still working there? Call us now and ask about bonus options on your retirement money with a fixed indexed annuity. Imagine putting your money on an elevator that only goes up. It might stop on a few floors on the way up when the market index goes down, but you won't go back to visit the lower floors. Our phone number is 866-780-SAFE. That's 866-780-7233. You can get your complimentary copy of Brad's best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan, by calling us now. That number is 866-780-SAFE. That's 866-780-7233. Now back to more Safe Money Radio with your host, Brad Pistole.
Welcome back. I'm Brad Pistole, your host of Safe Money Radio. I am a capital preservation and strategic income planning specialist working with clients right here in Springfield and Ozark, Missouri. Well, friends, before the break, you got to listen to a special piece of advice from my good friend Ed Slott, who's talking about just how important it is to be prepared for the second half of the game. And what's the preparation involve? Tax planning, making sure you're working with someone who understands the impact of taking distributions from tax-deferred accounts, because it's going to affect everything else. And right now, we're going to hear from my good friend, Heather Schreiber. Heather's from Atlanta, Georgia. She speaks all over the country. She's retained by several different major companies as their tax planning expert and their IRMA specialist. That's income-related monthly adjustments. And here's the thing. She is also a fellow income-related monthly adjustment amount certified planner. Both Heather and I have been through that course and have that financial designation. So listen very closely. She's going to be talking very specifically about what IRMA is and how it will impact you when you retire. Listen to what Heather has to say. Age 63, I know to a lot of people, that's going to throw them like, why is 63 an important age? And it's really important. So Heather, tell everyone why it's important.
Yeah, when I went on the road and did this presentation, they were like, that one just doesn't strike a chord. And it should. And it doesn't for a lot of people. Even tax professionals don't think about this age. But it's an age that people go, yeah, I should have thought about this age. For those folks that intend to or do enroll in Medicare at 65, they need to be thinking about what their adjusted gross income or their modified adjusted gross income looks like in the year they turn 63. And every year thereafter have to be once they're enrolled in Medicare, because Medicare premiums, for example, for 2024 are based on what Magi looks like in 2022. So you have to look at what are the things that I'm doing in the 2 years prior to the current year when I'm on Medicare, because things like Roth conversions, while really a great tool to help mitigate that risk of having too much in the pre-tax bucket, knowing that at some point in the future I'm going to be forced to take it out in the form of RMDs, they're great tools to kind of diversify that risk. If you're doing it at 63, when you plan on enrolling in Medicare at 65 and you go over certain levels in 2024, if your Magi was over 103,000, If you're single and 206,000. If you're married, you start getting into what's called premium surcharge bands. There's 5 more, and you get hit with IRMA, income-related monthly adjustment amounts, and they'll hit you for a full 12-month period. And if you're married and you're both on Medicare, times 2. So it can get up to almost $600 a month instead of the standard premium, right? So it surprises people. Now, what I will say is people say, well, wait a minute, at 65 this year, you're using my income when it was one of my highest earning years, and I've since retired. Certain life-changing events or qualifying life-changing events can be appealed. You can ask for a reconsideration of that premium based upon a more current year. And you use the life-changing event form. You do it as soon as you get your premium notice, which usually comes out in end of October. And you send it back and say, wait a minute, I've since retired, whatever it is. Work stoppage is one of them. Give them proof from your employer saying you've retired, and use a more current year. If you retired in 2023, or 2022, you use 2023's Magi. There are certain things. But you got to be mindful of that. Once you enroll in Medicare, you got to be thinking, okay, what's my income going to look like? Did I inherit a big IRA that I can now only stretch over 10 years? Whatever the case may be, you got to be mindful of that. People are surprised by it. And a lot of times CPAs don't even catch it. So it's something I always think about when we're working on situations where we're trying to plan income, and that to make sure, okay, wait a minute, if we do this big conversion or whatever it is, we got to stay under these brackets if we don't want to have the income tax plus IRMA visiting for 12 months. Right.
I want to repeat that because I know it's a lot of information. So for people listening and they're thinking about their Medicare premium, and if they're 63, they don't realize their Magi at age 63, if they're married joint filing, it impacts their premium when they turn 65. So how big is the range of premium?
It is, so I'm going to look at it. It's 5, so it can go up to, the standard Part B premium this year is $174.70.
Okay.
But if you get to so if you get to the top, so if you had income over greater than $750,000, now this is for married couples, it can go up to $594 per month. If you have 2 people on it, it's double, right? It's double that. So it's a premium band. But let's say that you did a big Roth conversion and you went up, the married. So if you have AGI under 206,000 or less as a married couple, you're fine. But if you have $206,001, you're in the next brand. So it's a cliff regime, right? And then instead of paying $174.70, you pay $244.60. So it continues to go up for each band. So you just have to be mindful of that. And so, and Magi is before deductions, right?
Yes.
So if it's not, I've got my standard deduction. It's not before your standard deduction. So you just have to be careful of that when you're doing planning. Now, if it happens to you one year, just know that the next year it's then use the next year's AGI or Magi. So it only hits you for 1 year if it goes back to normal levels.
If 2 people, and we're huge proponents of doing Roth conversions and paying Uncle Sam now and paying for taxes when they're on sale.
Right.
But if you're above the age of 63, you have to think about this because it is going to affect your Medicare premium. So if you convert $200,000 from an IRA to a Roth IRA, that's all being added into your earned income. Your Medicare premiums are going to go up, and then you might be paying that times 2. So just make sure.
You got to think about, but down the road, what do these IRAs look like? Let's say I have IRAs, they're going to have huge RMDs down the road. Am I going to be paying this year over year because my RMDs are going to be so high? See, that's why you have to work with someone that understands. Am I going to pay it now to lower the risk of these RMDs, making me have to pay it year over year? That's why you have to work with someone that kind of can help you navigate what's the best avenue to take.
Very good. And we are retirement income certified professionals, so call us anytime at 866-780-SAFE. That's 866-780-7233. If you want a copy of our free information or a free consultation, or if you want to read a copy of one of our books, just give us a call, 866-780-7233. I want to start this segment by reading something out of the front cover of the book. It says, whether your retirement dreams are 5 years away or 50, the single greatest threat standing in your way is taxes. Unlike losses experienced in the stock market, money lost to taxes never recovers. With untaxed retirement accounts likely to become your largest asset, you face an explosive landscape of costly tax traps, penalties, and a complex maze of rules when the time comes to tap into those savings. So Ed, in talking about your brand new book that's coming out on June the 11th, tell us about the broken promise. You mentioned the broken promise in the book. What is that?
They said, well, you get a deduction, you put money in your 401k or IRA, you get a deduction, and then you'll take it out in retirement when you'll be in a lower bracket. But that's not happening. And a lot of people actually still say that to me. I talk about Roth conversions and say, why? I'll be in a lower bracket in retirement. But they forget that all those years that they've been working, building, saving, and investing, their retirement account has been increasing. And It's been compounding and accumulating, but also accumulating for your partner, Uncle Sam. And that money is going to be heavily taxed in retirement. Right now is the time to strike. Right now. We have a 2-year window before rates are supposed to get jacked back up, but it could even be before then. I look as an accountant, that's my training, a CPA. I was taught to believe in math, okay?
Math doesn't lie.
Right, numbers are numbers. I look at as of this recording, a $34 trillion debt. Probably by the time you see it, if you're watching the recording, it could be 40 trillion. Who knows?
Right.
I believe in math. The whole country is running on a credit card. When will the bill be paid? Congress has been kicking the can down the road. Maybe I'm wrong. Maybe they'll never pay it. But you know who's going to be caught in the soup if Congress ever gets their act together and decides we need to pay some bills? It's going to be the people with the most money tied up in IRAs and 401ks, and they are going to break that promise, and you'll be taxed into oblivion. That's my feeling, that day is coming. I call it Judgment Day, Tax Day. Yes, we played by the rules. You did everything right. That was the plan. But when the government needs money, all the plans go out the window. So you have to be proactive and get your plan so you don't end up with a government plan. Oh, Ed, you keep saying your plan, not the government plan. What is the government plan? Maybe I'm interested. No, you're not interested in the government plan. But if you absolutely must know what it is, it's very simple. Do absolutely nothing. And let the government take over and tax you whatever they feel they need from you. That's not a good plan. Right now, you can control your tax rates. Once you're on the government plan, it's out of your hands. It's out of control. And that's a dangerous situation. So you want your plan, not the government plan. You want to be proactive right now. That's why listening to Brad here and getting some of your affairs in order here, especially if you're in retirement or you're heading there, you're in your 60s, that's probably the sweet spot where you can move a lot of your IRAs around, do Roth conversions, use life insurance. Not that you can't do it once RMDs kick in, required minimum distributions at age 73, but then you're limited because you're forced, that's part of the government plan, part of that broken promise I talk about, you're forced to take that money out whether you want to or not. Now it's out of your control. Right now, you can control your tax rates, your brackets, and take advantage of these 12%, 22%, 24% brackets. People think, Brad, that taxes are always high. It could be 1%. They say, well, it could have been 0.
Right, right.
But if you look at page 28, something I always go to here in the book, you'll see a history of tax rates. I put this in so you could see how good you have it now. These are the good old days. I do the complete history of tax rates from the 16th Amendment. This is on page 28 when you get the book, just to sober you up on how bad it was and could be again if you believe in math like me. From 1913 to right now in 24, the top federal rate. So I highlighted, you'll see in the book, certain years, the years me and many of you watching or listening were born, the baby boomer years. These are the people coming into retirement and transferring the wealth at some point. So those years that the baby boomers were born, which I have highlighted here, 1946 through 1964. If you look at this chart, you'll see the top federal tax rate for each of those years exceeded 90. I should write it out because when I say it, I think I heard him say 90. It can't be right.
Yeah.
90%, exceeded 90% every one of those years, except the last year, 1964. I was only 10, so I wasn't really into that yet. I was watching the Beatles on Ed Sullivan then, but I was told in 1964, maybe that's why they lowered the rates. They lowered the top rate, which was went from 91% all the way down to only 77%. And I'm told the whole country did a happy dance. Only 77% taxes. What a deal. That's more than double what we're paying now. These are the good old days. Now is the time to strike. The key to all good tax planning, which in English means keeping more of your hard-earned money, is to always get the money out, pay taxes at the lowest rates, which may be right now. And the reason I give you the history is to show you how bad it could be. It was Mark Twain that said history doesn't repeat itself, but it rhymes. Or another way to look at it, those who don't learn from history, the rest are bound to repeat it.
Doomed to repeat
right
it.
now, you have this window. You have Brad, one of the top advisors in the country, because he has invested in his education on tax planning to learn this so he could save his clients a fortune in taxes.
Well, friends, there you go. You've heard it today from retirement planning expert Heather Schreiber. She's a retirement income certified professional. She's an IRMA certified planner. And you've heard from Ed Slott, America's IRA expert and a CPA from New York. They are trying all they can to get you to understand the second half of the game is the most important part. Making sure that if you have accounts that are tax deferred, that you have a plan for getting the money back out in the most tax efficient way and for passing it on to your heirs in the most tax efficient way. And that's exactly what we do here at Safe Money Radio. I am a certified financial fiduciary, a retirement income certified professional, a certified annuity specialist, and I am an income-related monthly adjustment amount certified planner. You can call us anytime at 866-780-SAFE. That's 866-780-7233. Just request a free financial consultation or ask for a copy of my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. We will show you exactly what you need to be doing to be prepared for the retirement income of your dreams. Our number is 866-780-7233, and there's someone standing by right now to take your call. Well, I'm about out of time, and I would like to thank you for listening to Safe Money Radio. If you're serious about your financial future, give me a call, and together we'll get your retirement savings on the fast track to accumulation while reducing exposure to market losses. Thanks for listening, and until next time at the same time, I'm Brad Pistole, reminding you to stay safe so you can step into a secure future.
Safe Money Radio, your money safe and sound.
You've been listening to Safe Money Radio with your host, Brad Pistole. Find out how to contractually guarantee that your hard-earned money is safe while avoiding market loss so you can have the retirement that you deserve. Call Brad Pistole now for your complimentary Safe Money book and Safe Money information kit at 866-780-SAFE. That's 866-780-7233.
Safe Money Radio, your money safe and sound.
The preceding information does not represent tax, legal, or investment advice. Surrender charges apply to base contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or in a death benefit unless specified in the annuity contract. Fees may apply. Guarantees are based on the financial strength and claims-paying ability of the insurance company. No information presented today should be acted upon without meeting with a qualified and licensed professional. Obviously, by calling us now, you are just taking the first step towards protecting your retirement. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program are subject to change without notice.